Welcome back to our channel, where we talk about cryptocurrencies and the world of investment. In this video, we address a hotly contested topic: should investors add cryptocurrency to their retirement accounts? Individual retirement accounts, IRAs, for example, offer tax benefits and the possibility for long-term development. But is it a good idea to add bitcoins to these accounts? Let's analyze the subject and the factors that investors should take into account. In recent years, cryptocurrencies have become more and more popular among the general public. Some even believe that they are a suitable retirement investment as a result of it. In fact, approximately one-third of investors under the age of 55 want to rely on cryptocurrencies throughout retirement, according to the 2022 Investopedia Financial Literacy Survey. Given the turbulence in the cryptocurrency market, this strategy might seem dangerous, and it is. Early in 2022, the Luna stablecoin on the Terra blockchain was destroyed, wiping out more than $17 billion in cryptocurrency value. The coin's price experienced one of the most extreme crypto crashes ever, dropping from $116 to a fraction of a penny in a couple of days. This is due, in part, to the fact that cryptocurrency is not covered by the Federal Deposit Insurance Corp. (FDIC), because it is not recognized as legal tender backed by the United States government. The Employee Retirement Income Security Act, ERISA, requires plan fiduciaries to protect participants' retirement assets, and the U.S. Department of Labor has advised the retirement industry to take extreme care while investing in cryptocurrencies. However, established businesses like Fidelity Investments are taking notice that certain people are more at ease with risk than others. The largest retirement plan provider in the U.S., Fidelity Investments, was the first to include Bitcoin as an investment option in its 401k plans this year. Investors will be able to designate up to 20% of their retirement funds to Bitcoin under their plan. Individual fiduciaries, however, are free to set their own employee contribution and allocation caps. But just because it's feasible to invest in a security like cryptocurrency for retirement doesn't mean it's a smart move. Is cryptocurrency a good long-term investment? The introduction of Bitcoin in 2009 signaled the start of the current cryptocurrency era. Over the years, Bitcoin has experienced a mean yearly return of 93.8%, which is rather outstanding, but it doesn't mean there haven't been any hiccups. The return for 2018 was minus 72.6%. Not all coins have done as well, even though early investors who stuck with it have earned enormous profits. Investors have had, to put it mildly, mixed results with the thousands of cryptocurrencies available. Nevertheless, the 2022 Investopedia Financial Literacy Survey found that among respondents aged 18 to 55, cryptocurrency had the best projected returns. 30% of millennials believe that cryptocurrency returns will surpass those of mutual funds, stocks, and real estate. But only time will tell if such hopes are justified. It's still too early to tell whether investing in cryptocurrencies will be a wise long-term move. Retirement is more than a decade away for the majority of investors under the age of 55. It can be a little concerning when you consider that the same people who anticipate great profits may not completely grasp where they intend to invest their money. More than 40% of respondents in Investopedia's survey across all age categories claimed that Bitcoin is either too hazardous or too complex. Particularly among millennials, 44% believe that cryptocurrency is too hazardous or complex for their money. However, 58% of baby boomers believe that cryptocurrencies are too complex. Only 5% of baby boomers and less than 50% of millennials claim to be able to explain how cryptocurrencies operate, and only 3% of those who understood non-fungible tokens, NFTs, sufficiently to be able to do so. Therefore, it is obvious that cryptocurrencies can be a novel and occasionally fashionable new asset class, but they are also incredibly dangerous and volatile. Before relying on cryptocurrencies for your retirement, you might want to pause and speak with a financial counselor. What to look for when choosing retirement investments. It's important to take into account a number of crucial elements while you develop your retirement portfolio, such as anticipated growth rate. The anticipated growth rate is a crucial investment basic. Investors in the stock market and in bonds rely on different valuation models to forecast growth. With cryptocurrency, that is more difficult. Risk and volatility. There are decades of historical data and risk measuring methodologies for both the stock and bond markets. In addition to being riskier and more volatile than equities or bonds, cryptocurrencies also have a more difficult time being measured in terms of risk. There are just a few models available to calculate cryptocurrency risk. Cash flow. Numerous investments provide steady dividend payments, bond coupon payments, and other types of cash flow. Due to staking and yield farming, numerous cryptocurrencies offer an advantage over more conventional investments in this situation. However, it's likely that these more modern methods won't work the same way when a person retires in 10 to 20 years. Of course, something isn't inherently a negative investment just because it's new and unproven. Investors have the final say in where to invest their money, so they should always examine the advantages and cons before making a choice. How to create a foundational retirement plan. What is the right amount for an investor to invest? It relies on a number of variables. Determine your retirement financial needs first. Next, decide how much money should be invested and contributed to get there. For the typical investor, traditional investment strategies tended to combine stocks and bonds to achieve this goal, frequently placing a significant emphasis on tax-advantaged 401k plans and individual retirement accounts, IRAs. Some traditional brokerage firms are starting to integrate cryptocurrencies to standard retirement accounts in addition to cryptocurrency-specific and fully self-directed traditional and Roth IRAs. Therefore, before investing your money in such a dangerous asset, get financial advice if you are certain that this is the right course for you. Retirement funds are possibly the most significant investments someone will ever make in their lifetime. And if you invest heavily in cryptocurrency, or if you solely invest in it for your retirement, as we have seen in recent crypto winters, and that asset class crashes, you can be forced to abruptly reevaluate your present and future objectives. Where crypto fits into an investment plan. Many investors should completely avoid integrating cryptocurrencies in their retirement savings due to the danger, volatility, and difficulty in projecting its future. If you do decide to invest in cryptocurrencies, it could be a good idea to keep them at a lower percentage of your overall portfolio. You could be better off keeping Bitcoin as a relatively modest piece of your entire portfolio and out of your retirement, unless you're a big believer in it and want to take advantage of the tax benefits of a cryptocurrency IRA. The majority of your retirement assets should, according to many financial advisors, be kept in the stock market, particularly in low-fee, diversified exchange-traded funds, ETFs. High-risk alternative investments are nevertheless acceptable as long as they just make up a fraction of your portfolio and are not essential to your future financial security. Can you use Bitcoin to plan your retirement? Bitcoins in a 401k is a novel notion despite the current popularity of cryptocurrencies. By the middle of 2022, Fidelity Investments expects to start including Bitcoin investment options in its 401k plans. Point 3. What should you think about before including Bitcoin in your retirement savings? Bitcoin and other cryptocurrencies shouldn't be hurriedly added to 401k plans by investors just because they can. They ought to see the asset both as a way to achieve their financial objectives and as a way to store value. Can one retire exclusively with Bitcoin? Regardless of what you invest in, it's critical to be realistic about how cryptocurrency can affect your savings. Although it can be a profitable investment, it is riskier than stocks. It is always advised to diversify a portfolio to reduce risk and avoid relying entirely on one asset. The conclusion. Think about this possibility when you develop your cryptocurrency investment strategy. You would have $50,000 if you invested $5,000 in cryptocurrencies and it increased by 10%. What a fantastic return. But would it be sufficient if it reached zero? The $5,000 example may be appropriate for some people or households, but your investment portfolio, risk profile, and financial objectives are particular to you. You can choose the best allocation for your retirement portfolio and other investments by knowing your investments and how each asset you possess operates. Cryptocurrency might be appropriate for either of those two investment approaches. But if you want to rely on assets for your retirement, make wise investments. To thwart your retirement objectives? Most likely not. And that concludes our discussion on whether investors should put crypto in their retirement accounts. We've explored the potential benefits, considerations, and risks associated with including cryptocurrencies in retirement portfolios. Recall that there are dangers associated with cryptocurrency investing, like as volatility and regulatory uncertainty. It's critical to evaluate your risk tolerance, talk to financial professionals, and keep up with the constantly changing crypto scene. In the end, your choice to incorporate cryptocurrency into your retirement funds should be consistent with your long-term financial objectives, level of risk tolerance, and investment approach. To make decisions that are well-informed and appropriate for your particular circumstances, make sure to perform in-depth study and seek professional advice. We hope you found this video informative and thought-provoking. If you have any questions or experiences to share, please leave a comment below. Don't forget to subscribe to our channel for more valuable insights into investing in cryptocurrencies. Thank you for watching, and until next time, happy investing.